Hey crypto fam, we're going to dig into a popular cryptocurrency that traders have been using for years to leverage their trades without going back to fiat. It's the first popular stablecoin project, Tether, or otherwise known by its ticker symbol USDT. A stablecoin is pegged to a fiat dollar, meaning that it's unaffected by the price of Bitcoin and the wild swings of the crypto markets. The reason investors and traders use Tether is liquidity, or the ability to get in and out of cryptocurrency positions without huge changes in price. In the last 24 hours, Tether has reported $38 billion in trading volume, making it the most liquid cryptocurrency, even more liquid than Bitcoin. Not only is it the largest stablecoin, but it's also one of the largest cryptocurrencies by market cap. Stick around as we tear into the nuts and bolts of USDT and find out what makes it tick. We're going to jump in the Wayback Machine and dial in January of 2012 when a fellow by the name of J.R. Willett proposed the idea of building new currencies on the Bitcoin protocol. This idea materialized into Mastercoin, which aimed to utilize a new second layer on the Bitcoin blockchain. Mastercoin would eventually become the technological foundation of the Tether cryptocurrency. In July of 2014, a few team members from the Mastercoin project established their own startup called Realcoin, using the same second layer technology renamed as Omnilayer protocol. Later that year, Realcoin was renamed to Tether, referencing its ties to fiat currency. By definition, a tether is a line tied to an object to restrict its range of movement. This connection is represented digitally, meaning each tether coin is equivalent to $1 or alternate reserve currency, essentially making it a digital dollar. Bitfinex, which is a sister company of Tether, claims, every tether is always 100% backed by our reserves, which include traditional currency and cash equivalents, and from time to time may include other assets and receivables from loans made by Tether to third parties, which may include affiliated entities. Every Tether is also one-to-one pegged to the dollar, so 1 USDT is always valued by Tether at 1 USD. So, how does Tether work? First off, we need to point out that Tether, besides being a stablecoin, is a unique cryptocurrency in that it exists on several different blockchains. Currently, there's a Tether token on the Omni Bitcoin platform, Ethereum, EOS, and on Tron. The difference between the four coins has to do with the properties inherent to the blockchain hosting Tether. For instance, for maximum safety and immutability, some investors may prefer the Bitcoin Omni version of Tether. Other investors might prefer the ERC20 Tether token, as it can be used in DeFi to earn a passive income. Apparently, very few investors want to hold their Tether on the Tron network. We'll go over both the ERC20 flavor, which is the most popular, but first, let's begin with the Omnilayer OG version, which is based on Bitcoin. Tether's technology consists of a three-layer stack: the Bitcoin blockchain, the Omnilayer protocol, and Tether Limited. The Bitcoin blockchain is the bottom layer that serves as the transactional ledger and runs the consensus algorithm. The second layer, Omni, is used to create and destroy digital Tether coins, as well as track and report the tokens in circulation. This layer also enables users to send and store these tokens securely and anonymously. The third layer, Tether Limited, is the business entity that manages fiat deposits and withdrawals from the Tether reserve, along with the management of Tether's web wallet and compliance logistics. When a user deposits fiat currency into Tether Limited's reserve by selling fiat to buy USDT, Tether Limited generates and issues the corresponding amount of digital dollar tokens to the user that can then be sent, stored, or exchanged. If a user deposits 100 USD, they'll receive 100 Tether tokens. Now, going the other direction, these Tether coins are destroyed and removed from circulation when the user redeems the tokens for fiat currency. Bitcoin's secure blockchain and its network effect helped Tether gain popularity over other stablecoins operating on different blockchains. In August 2019, the ERC20 version surpassed the Omni version in number of transactions, and in October of the same year, it surpassed it in the market cap and never looked back. Today, the ERC20 version is the indisputable leader in the market cap between the two, with a little over $10 billion, compared to the $1.33 billion in the Omni version. That move wasn't without criticism, however, and critics claim the high volume of USDT transactions saturates the Ethereum network and increases transaction fees. In fact, in July and August last year, when most exchanges made the switch from Omni to ERC20, the oversaturation of the trades was 17 times higher than it was during the Ethereum gridlock of November 2017. USDT has two more versions built on top of two more blockchains that are smart contract oriented, Tron and EOS, as well as a future USDT token on the Algorand network. USDT has proven to be the most used stablecoin in the ecosystem, with a sizable lead in volume compared to USDC.